Hey man, I'm Jusko from ProudMoney.com. Big news today, Robinhood is acquiring the X1 credit card, the X1 company. The price, $95 million. Now, as far as I can tell, it looks like about $60 million has been invested into X1, so that seems like at least kind of a win from X1's perspective in terms of when this deal is going down. Supposedly it is going to close in the third quarter of 2023, which means by the end of September, X1 should be part of Robinhood. If you're an X1 credit card holder, it's hard to know yet what to feel about this acquisition. Is Robinhood going to change the X1, or are they going to allow it to keep functioning the way it has? So are we going to get a rebranding to this becoming a Robinhood credit card or X1 Visa by Robinhood? Maybe it doesn't matter if they're not going to change the terms, but maybe they are going to change the terms. Maybe the credit card becomes something different in the future. We just don't know. So we don't know if Robinhood sees something in this business that, they know exactly what they want to do with it, or if they just want to diversify the number of things that they actually do when they saw the opportunity to buy a credit card operation that was already up and running. It would be interesting to know how this deal went down and how the team behind X1 feels about it in the sort of everyday person's world. If you invested $60 million, if you had $60 million, and you got $95 million back, you'd feel pretty good about yourself. In the venture capital world, where they're hoping to get 5x, 10x, or even more on the value of their investments, a 50%-ish return on that money is not necessarily sensational, but it is better than going to zero, which is what happens with a lot of companies that start up with venture capital money. So don't know how much the X1 founders themselves end up with in this kind of deal. Maybe not as much as they hoped for with all that money put into the company and all the time and energy they have put into it, but that's not our problem. When I first saw this news, I was pretty surprised, but I probably should not have been. A lot of these fintech startup credit card companies out there, they started at a time where there was a lot of venture capital money flowing. Now the market has gotten a little shakier, a little cloudier in terms of what the future holds. So a lot of them probably had hopes that they would have longer to build a brand, longer to figure out their business model, but now there's probably a little more pressure from their investors to figure things out faster. I look at what Pedal and Tomo in particular have done recently, added some fees to some of their cards after their initial pitch when they started up was that their cards were not going to have any fees. So they have had to make some adjustments probably to try to get toward profitability, or at least make their balance sheets look better. So maybe they would end up being sold as well. When you look at X1, probably a little more traditional in terms of how they run their credit card operations, or at least what their credit card is offering. So maybe that made them more attractive to Robinhood. Maybe they have a little better balance sheet. Maybe they're even profitable, although I would tend to doubt it. Anyway, if you are someone that has an X1 credit card, I would be interested to know what your reaction is to this news. Put those thoughts in the comments section below, or any other thoughts that you have in the comments section below. Otherwise, I thank you for watching, and as always, please go to ProudMoney.com, where we do credit card reviews, we talk personal finance, we talk deals, and all sorts of other fun stuff too. If you're not putting a comment in that comment section, or you are not going to go to the website, you might want to watch this video next.